Hello guys, welcome to the first video of my channel. It is January 4th, 2026, and it is a brand new year. We are going to lock in. We're going to take $1,000 to over $100,000 just by trading SPY options, and maybe some tech stocks. And I'm going to take you through my journey. So if you are interested, follow along, subscribe to this channel, and we're going to get right into the S&P 500 technical analysis, starting with the S&P E-mini futures. So you can see that on the daily time frame, we did get a bearish MACD cross, which signals a bearish momentum is imminent. This doesn't mean that the S&P 500 will fall right away. And you can see that it's holding the 20 moving average, the 50, and the 100 moving average. It hasn't broken any of these support levels. We did find support previously in mid-December around the 50 moving average, and then in late November around the 100 moving average. So there is still plenty of support levels that can support this market and drive the market even higher. Notice that, over the last 5 or 6 days, we had pretty much all down days, and that was on light volume, and that was on tax loss selling, because a lot of people are selling for to offset their capital gains. And so we did see a little bit of weakness last week. However, we also saw the lowest volume for the S&P 500 in all of last year. This is not something that you should read too heavily into. I believe that the market should rebound. And if you look at the 4-hour time frame, we are trying to get back above the 100 moving average on this time frame, and we are forming a little bit of a bullish divergence on some of the hourly time frames as well. You can see that the MACD is trying to form a higher low, but the price formed a lower low, so that's a bullish divergence. And same thing with the triple Qs. I'm seeing the same thing with a bullish divergence that's trying to form and the hourly trying to curl up. So we should see some retracement to the upside early next week. And what I want to point out is that the MACD on the weekly time frame is actually showing weakness. So in order for any sustained upside, we really want to see this MACD turn to bullish to support continued upside. However, with the MACD turning bearish on the weekly time frame and the price starting to show consolidation, it isn't really good news for the bulls. However, there are bullish catalysts next week that could change the big picture. And that's starting with the jobs report on Friday, January 9th. We get the employment report, we get the unemployment rate, we get hourly wages. All of this is going to be really big for the overall economy. I don't think Trump is going to do anything that would, cause the market to crash in a really big way. So, again, it could be manipulated. So, and one of the biggest news that happened over the weekend was, Trump capturing Maduro and, seizing Venezuelan oil reserves. And that's going to be really big news for the oil markets going forward. However, we're just going to see what happens to this. I don't think anything substantial is going to happen to the equity markets, because if you look at Bitcoin, it's actually up around 2% over the weekend. So if anything bad would have happened to the overall markets, crypto should lead to the downside substantially, and we're just not seeing with Bitcoin, with Ethereum. So I think the equity markets should be fine going into early next week. And over late next week, we'll see how everything develops. So going back to the S&P 500, you can see that on the 4-hour time frame, we did find support at the 200 moving average around 679, 680. The MACD on the 4-hour time frame is trying to curl. It is still negative, so signaling bearish momentum, but it is trying to curl. We could find resistance at any of these resistance levels, like 686, 690 even, and then resume to the upside. But all that is speculation, right? All we want to do for the S&P 500 for our trading plan is to play what's in front of us. And if you look at the VIX is currently sitting at 14.5. So, we're not seeing any increased volatility with the VIX over 19, over 20, or anything like that. It is very subdued. The VIX is looking very weak and supports continued upside, possibly into S&P, 7,000 or 7,200 in the next few months. So we'll see how everything plays out. We could probably test some of these, lower support levels, but we'll take things one at a time. Thank you guys for watching. And if you plan to follow me on my journey, stay subscribed, comment down in the section below. And I will see you guys in the next video. Thanks.